Today's topic, it will be different. Usually I cover for you the weekly Forex forecast every Saturday, but we have decided to go and share with you something new today. Maybe it will help you take better financial decisions. And if you like this sort of content, please let us know in the comment section so we can share more into that. My topic today is about the recession and about actually the S&P 500, if it will fall, how much will it fall, and when the recession might come in the US, and what are the indicators that we usually follow or we look at. I'll show you 7 points today. I'll explain you 7 points where and why we're expecting the recession. Do I think a recession is coming in the US? Yes, and here's why. I explain you this one step by step, guys, point by point. So please keep watching till the end to not miss anything of it. If you have any question, put in the comment section. I'll try to not make it complex. I'll try to simplify things for you so you understand it, I would say, in a simple way. So number one indicator or number 1 point or the first point is the yield curve inversion. Actually, the yield curve, guys, was inverted for a record duration, more than 12 months and 15 months as well. So what I mean by that, what is this? I explain you this in detail so you will know what I'm talking about and what is that and why this signals usually a recession. And is there any proof for a previous cycles? This is what I'll show you now. So the yield curve inversion, guys, is a warning that you should not ignore. What is that? Under normal conditions, usually long-term bonds pay more than short-term bonds. Why? Because the longer your money is locked up, the more you expect in return. So for this one, when the 2-year yield rises above the 10-year yield, that's called a yield curve inversion. And that's a major red flag. What I mean by a major red flag, in history, whenever this was happening, a recession comes after. And why this actually a red flag? Because this signals that investors expect the economy to slow down long term. So if the result of the 10-year yields minus the 2-year yield is negative, this is called yield curve inversion. And that's, again, a big red flag. This was happening, guys, in the past. And it's not history. It's actually, this happened before. In 1991, we're having the Gulf War recession, if you remember. In 2000, we're having the dot-com crash. In 2008, we're having the financial crisis. And in 2020, we're having the COVID crash. And now we'll have the next recession. I'll explain you when, in terms of the timeline, when I'm expecting this to happen. But just to show you the proof regarding this one, look at that. Let's start with 1991 for this one, all right? So in this one, we're having this one here, the yield curve inversion at that time here, 1 year before. And this was the Gulf War recession here at this point, if you can see it, right? So the recession happened here, or like it hits here at this point. For 2000, for the dot-com crash, this was the inversion here, as you can see it here and here as well, slightly. And this one, and we're having this one here, the recession. And 2008, the big financial crisis where the S&P fell more than 50%, it was here. And this time, look at this one and look at this one. So in 2006, we're having the inversion, and in 2008, we're having what? The recession. Now, the last one that we know, it was in 2020, the COVID crash, and we're having the inversion here straight before that, okay? Now, this was what? The longest duration, like I said to you, more than 15 months, this was negative in 2022. And a recession is about to hit very soon based on this indicator alone. Again, this is first, I would say, one indicator out of 7 that we are following. Of course, we might be wrong. This is not a financial advice. It's just for education purposes, all right? So if this is something interested or you want more content like that, please let us know in the comment section. We are more than happy to do that. We are into investment, how to achieve financial freedom the soonest, because your goal has to be, I want to achieve financial freedom. We are at this stage, you should be at this stage as well. So again, all WTW members, WTW Pro members, they know that, and they are getting the fruits every single month and every single week as well. So anyway, for this one, this is actually the first indicator. I hope this is clear for you. And if you have any question, you can put in the comment section. I'll answer that. So here, after this one, I'm expecting, by the way, the recession to hit between Q4 2025 and Q2 2026, okay? Just to give you the timeline. And recession means the economy will slow down and the S&P 500 will fall. It will crash. How much? Between 20 to 40% and probably more than that. But again, this is for people who are not in the long term, right? So if you are an investor for long term, this should not be a worry for you, because we all know that usually the stock market is resilient and always it goes and makes new highs, right? So what I'm trying to explain now is this, I would say, forecast, or this explanation is for those who are not for the long run. Those of you are applying the DCA, dollar cost averaging, who understand the power of compounding interest, who are actually not, don't get me wrong, don't take it personal, but who are not pro investors, this should not be a worry for you, because if you apply DCA, this means any drop will not affect you in the long term. You get me? So this is for those who want to take actually better financial decisions for short to mid term. This should be applicable for you. Okay? So for that, I hope this is clear. Now, back to the number two. Number one, I hope this is clear for you. Number two is the Q1 2025 GDP. It was already negative, all right? So it came into minus 0.5. And most of you know negative GDP is a sign of recession. Of course, not the first one. Once we have 3 consecutive negative GDP, this actually where we will say we are technically into a confirmed recession. Even if Q2 comes negative, which will be in the next few weeks, even if Q2 comes negative, this again a big sign for us that, all right, we are into, or we will be going to a recession. And if Q3 as well comes negative, this will confirm as well more into that. Stagflation as well conditions might happen. I don't want to actually go into details regarding this one to not actually, I would say, make your life complex between inflation, stagflation, recession. Let's stick to the recession part now, and all the other details we can discuss it internally. So again, in regards to this one, this was actually, again, the yield curve inversion between this one. That's actually the resource. If you want it, you can actually get the link from here, from the top. Okay. Now, regarding the GDP, as again, you know, this came negative, minus 0.5 in the Q1. All right. And this, again, a sign that, all right, this is the second indicator, the second signal that, all right, we want to be going into the recession very soon. Now, point number 3, or indicator number 3, is the pressure to cut rates. Most of you know the pressure that Trump is putting into the Fed, into the Powell, to either resign or go for the cut rates. And if that happens, usually, guys, Fed under political and market pressure to cut rates, and even Powell to resign. This is a big red flag as well, because usually central banks do not cut rates in a strong economy. They cut to prevent or respond to a weakness. And if markets actually, or if I would say politics are begging for cuts, and if they are begging to Powell to resign because he is not cutting, they are actually smelling something bad. They smell some trouble as well. So these 3 signs, these 3 indicators is showing us that, all right, guys, a recession is about to be here soon, is about to get in soon. All right. So that's the third point. The fourth point that I want to talk about is the leading economic indicators. This is something that as well you should follow, you should know, because if this is falling, means actually this is a red flag. And even for this one, this has actually declined for over 15 months straight. So for that one, that's something as well. In the past cycles, guys, this preceded a recession. So that's the fourth indicator that I want you as well to really follow and see, because the current status is deep in red and this clear a recession setup. Where can you see that? You can see it in here in this one, right? So the leading indicator, which is this one here, look at this one. We are now in red, as you can see. Okay, so usually in this one, we've got what? We've got the recession after that, this one as well, and this one. Now we are in red as well into this. So that's actually the fourth point that I want you to focus on as well, and I want you to take it into consideration. So 4 indicators till now, they are actually telling me that a recession is coming. Now, number 5 indicator or point that I want to discuss is the corporate earnings and employments are weakening. What this means, the earnings, guys, actually slowed to 5.6%, lowest since 2023. This is a big red flag, by the way. All right. So it's weakening in retail, in tech, and in real estate as well. Most of you know that because of the high rates, no one is able to take loans to buy homes as well in US. In case you're in US, you should know that. And even Trump was speaking about that in the past few days as well. So no one is able to buy a house because of the rates. This is what actually is hiding behind. Now, this is one of the things that as well you should follow as indicator. Job opening is what they are flat till now. Even the layoffs, even the unemployment is holding at 4.1 at the moment. So if we need just to analyze this one, not broken yet, but this is a sign that, all right, the recession, it might be coming. So once these numbers, guys, or once these indicators, they start to sign and signal a recession, they start to be bad, this is where the recession will start as well. Okay. Number 6, which is as well very important, the Q1. Look at this one. This is very important, guys, as well to know and to see. End of Q1 2025, which is Q1 2025, Berkshire Hathaway, which is the company of Warren Buffett, the greatest investor that we know. Actually, he held a record cash of about $347 billion in cash. Now, of course, it's in treasuries and cash equivalents, but just the number is $347 billion in cash, which means this is more than 34 to 35% of the company market value. So why do you think he have done that? In my opinion, he is waiting for better opportunities. So if Warren Buffett is holding 35% of his portfolio in cash, there is a sign behind that, right? So which means he's waiting for a drop to buy from a better levels. Even though the pro investors, they don't time the market, but if he can see opportunity, why not? He is not actually any, I would say, any investor. He is actually the best investor in our history that we know. You get me? So if Warren Buffett is holding more than 35% in cash, this means something is coming very soon. You get me? So this was end of Q1 2025. So that's as well a sign, a indicator that we are looking at or we are following. And at the same time, the S&P 500 peaks before every recession. And now S&P 500 is at all-time high. All of these 7 points, guys, is telling us that a recession is coming. Again, we might be wrong. Don't get this as financial advice to start panicking, selling your portfolio, but just get ready for it. If you don't know, just do not panic if this happens, especially if you are a long-term trader. Most of you know that even after the crash or after the drop, the market will come back and hit another all-time high. So, you know, market always, the stock market makes all-time highs always. So again, I hope this is something that it will benefit you guys in terms of what to do. Of course, there are sectors that outperform other sectors in terms of what to invest in. Do you go for tech? To what Bitcoin will do, and if we have a recession, how the Bitcoin will actually react, how the gold will react, how the dollar will react, the stock market, all of this, guys, will be discussed or is discussed in detail on every single Sunday session at the start of it. At the same time, during the monthly Q&A sessions, we go into these ones. So again, if this is something you think it's important or you're interested in this one, I hope, guys, this is clear and you take advantage of that. Let me know in the comment section, and we see all of you, or I'll see all of you next Saturday. Thank you very much.